Guys, welcome back to the Independent Investor Channel. We're going to be talking about asset allocation in this video. So for those that I'm unable to capture within the first 7 seconds, you can go ahead and sign off now. But in my opinion, asset allocation is one of the most important aspects of investing. It is riveting. Okay, I'm super excited to talk about this topic because a lot of people overlook it. And this is the very, very simple reason why a lot of investors get into trouble. They find out down the road that they're over-levered in a specific area, and they may not even know that they're over-levered. It can really help you avoid a lot of heartache in the stock market. And the better aligned you are with your investor profile and putting your portfolio to work in the manner that you tell it to go to work is going to help you succeed in the stock market. That's why this topic is so important. I'm going to drop you into the account, guys, and we're going to go over my specific investor profile as it relates to my portfolio and as that relates to the target allocation. So please enjoy, guys. All right, guys, welcome into the account here. This is my asset allocator tool. And I know with asset allocation, it can really be confusing because there's a few things that you need to understand in way of the language. In this video, I'm not going to be talking about whether or not you should buy Norwegian cruise lines. I'm not going to be talking about whether or not you should invest in the airlines. I'm not going to be talking about what direction I think the stock market is going to go in. We're going to actually talk about something meaningful, okay? And it hits home a lot more for me if I can take you into my account and actually show you the way that I'm allocated. So I'm going to be using these screenshots to actually take segments out of this asset allocator tool because I think it does a wonderful job of actually walking through asset allocation when comparing your current allocation or your portfolio and you take it and you throw it against your target allocation. Okay, so I'm going to try to talk you through the language. And by the end of this exercise, you should really be a lot better off in understanding whether or not your current portfolio is in line with your investor profile. And that is the end goal. And a lot of things that can be taken into consideration. I think to start, I always ask what the person's age is and the investing time horizon. Why do I do that? It's because if you look up here in the top corner, we're trying to determine the investor profile, and this is where a lot of people get lost. A lot of people will come to me and they'll say, Ryan, I'm an aggressive investor. Okay, well, in all honesty, there are 5 types of investors. I want to keep this video as simple as I possibly can. And everything in between a conservative investor and an aggressive investor will only render 5 different types, having conservative in the, moderate in the middle, and then moderately conservative and moderately aggressive and conservative on either end. So let me repeat. If you're more conservative, you're one of those investors that may be a little bit later on in life. Wealth preservation is more your goal, where you're looking to take a set amount of capital and preserve that wealth over time. And as we step toward the aggressive investor profile, what we're looking to do is accumulate wealth, okay? Now, as we step up on this spectrum toward the aggressive investor, it is going to be more necessary to take on a little bit more risk. So what this typically means is the weighting between your stock holdings and your fixed income. And I don't want to lose new investors. So I really want to try to walk through this as slow as I can to show you guys I'm right now demonstrating a conservative investor. So what this is going to show is that my current allocation is completely off because my investor profile is an aggressive investor. I have been for quite some time. I've evolved as an aggressive investor, and I've earned this capability by going through a lot of downturns, really fine-tuning my investor profile. And the more you invest, the better off you'll be in understanding who you are as an investor. And this does take time. And I think a lot of new investors really fall short in understanding their investor profile, and rightfully so. I think a lot of new investors don't really give themselves an honest shake, and they're not honest with themselves
about how much volatility they can take on, how much risk they are willing to take on in the market. Therefore, they under or overestimate their capability in their profile and in taking on maybe too much risk or maybe not taking on enough risk. Okay, so that's the investor profile. And I want you guys to pay attention to, on this column, this is my actual portfolio. So right now I'm at about 90% in stock, and if I was a conservative investor, it would have me decrease my equities holdings by about 165,000. So basically this is telling me that I am way too overweight in stocks. Okay, notice the terminology: overweight, underweight, or equal weight. Those are some of the terms that we're going to be using when we're talking asset allocation. Right now, I am extremely overweight. So if I'm telling this model that I'm a conservative investor and then I throw my portfolio at the asset allocator, you can see here that it's basically given me a red flag and it's saying, nope, Brian, you can't do that, man. You've got to decrease and hit this target allocation of 26% in stocks instead of this 90%, okay? So we're going to step it up and see how that's changed. I certainly do, for the sake of accurate assessment on investment profile, that you guys have the opportunity to work through something similar. Obviously, this is my broker, Merrill, and I just love this tool. This really helps me when I'm determining whether or not I'm underweight a certain asset class or a certain sector. I'll run it through this asset allocator tool basically, and it'll kind of give me some ideas from a portfolio perspective, not a single stock perspective, on where I may need to add a little bit to the portfolio or take something away from the portfolio. So in the interest of time, I've bumped up the investor profile, and you can see here the difference between what my current allocation is and now what it's saying is that this is increased to 59% in stock to equity. Stock to fixed income, all right? This is always an exercise in equities versus fixed income. Equities versus fixed income, okay? We've got to fill up this pie with something, okay? This is the stock holding here. The green is the cash, and the dark blue is the fixed income, okay? So a moderate investor is going to have a 60-40 portfolio, right? Very simple. It's telling you that if you're telling this that your investor profile is moderate, then it's going to call for a 60-40 split in the portfolio, where 60% of the portfolio is going to be stock, and the other aspect is going to be fixed income through your bond and corporate debt and U.S. Treasuries aspect of your portfolio, okay? So now let's kick it up to aggressive and see what happens. All right, so in the interest of time, you guys can see here that I skipped over moderately aggressive and I skipped over moderately conservative, okay? For the sake of demonstration on the investor profile, I think you guys have got the picture here. But as we kick up to an aggressive investor, now we're really starting to come in line with what my current holdings have and what my target allocation is, okay? So right now, currently, the current allocation is at 90%, and the target allocation is at 88%. So this is where this small little decrease recommendation comes from. It's basically saying, hey, Ryan, why don't you go ahead and shave off $4,000 of the total portfolio? We don't know where this needs to come from yet. I'm going to drop you down and show you where each of these are allocated from an asset perspective and from a sector perspective. This is really where it gets interesting, guys. I'll begin that exercise now. All right, so for the remainder of this video, I'm actually going to show you the breakdown not only from an asset perspective, but also a sector perspective. Now, the first model that I'm going to show you here is the asset allocator tool. I typically don't prefer to use this that often. I think it's a little bit more accurate to use the sector allocator as opposed to the asset allocator here. And what this means is this is basically just going to split this up between large cap growth, small cap growth and value, and international. Okay, so it's basically going to lump these into your categories, and this is fine to use, I think, for ETFs. It gets a little bit more, a little bit too broad when you start investing in single stock. But you can see here at the bottom, I'm pretty much on the nose with my allocation when I'm looking at the asset tool. I'm going to show you guys the sector model, and you'll see how that shakes out. It's a little bit better, I think. But it is your preference to understand how your current allocation stacks up when it's based against the target allocation. Now, this is for an aggressive investor here, okay? So it says to decrease by 4,000. This is total. But then we start to come in here and we start to break this down, and this is basically saying, look, I need to shave off 4% or 11,000 from the large cap growth. This says I need to decrease by 50,000 in the large cap value. This is not an exact science, guys. All this is just a baseline. There is no perfect portfolio. Allocation is not an exact science. It's not as if you need to just kill yourself making this allocation line up perfectly, because as you'll see here, there's certain sections of this, like the international in particular. I'm extremely underweight in international equities, and there's a reason for that. I pick up this international equity exposure in other categories, especially in my TSP, right? So if you know you're grabbing exposure in other accounts that are unaccounted for in the asset allocation model, you need to take that into consideration a little bit. And again, my personal preference, honestly, is not to have a large majority of my assets in international equities. I just prefer domestic equities, and that's just my personal preference. But you guys are probably looking at it, and if you're familiar with, let's say, the US stock market, or if you're investing in Europe or you're investing abroad, you're going to be that much more familiar with those and may feel a lot more confident investing in those markets instead. So this tool can really help you determine what the allocator says or recommends for your portfolio, and then basically weighs that recommendation against your current or actual holdings within the portfolio. So I'm going to kick you into the sector model real quick, or I may jump down and show you the bond allocation and see how that shakes out. But we're gonna jump into the next allocator tool, which is my favorite. And this is really going to hit home for you guys. So this is my favorite, okay? This breaks it down by the 11 sectors, and this is a lot more useful as far as I'm concerned in determining whether or not, see, I've got 8.38% in healthcare, and basically it's saying as an aggressive investor I should be at 35.2. Okay, so it's basically calling for an increase of 13,451. Now, does that mean I have to just fall over and just jump into this healthcare? No. It just gives me an indication of where the allocator tool determines I am in respect to each of the 11 sectors, right? So as we work down here, as I monitor this, I'm kind of equal weight almost, right? A little bit overweight in staples currently, and that's fine. Right? Remember that one of my strategic goals for my portfolio is dividend yield. Well, what better opportunity to gain some dividend yield than by pursuing it through the consumer staples sector, right? So there's some rationale behind me being a little overweight here with 21,410 in assets, as opposed to what the recommended allocation is at 17.8. Okay, so the allocator tool does the math for me, and it tells me to decrease by $3,500. All right, am I going to rush out and do that? No, that's not the point of running through this allocation model. And the real takeaway with this video is for you guys to run yourself, or at least find this allocation tool. I really hope you have something similar on each and every one of your guys' platforms, because you're going to find this to be extremely useful in portfolio building and aligning what it is recommended for your investor profile and what you actually have. All right. If you have an existing portfolio that you have no idea if it's in line with your investor profile, I highly encourage you to run it through. The numbers may shake out and it may alarm you in what you see here. See, I'm extremely deficient in discretionary, pretty deficient in technology. We're working on that. I've got some strategic initiatives in the works here, buying some old tech, maybe some IBM or some Intel here to beef up on this information technology. But you know, the allocation model is going to call for more technology as an aggressive investor. And that doesn't mean that I have to go out and just mirror what the allocator says I need. I'm going to invest the way that I want. This is just a tool to kind of show what the benchmark is and to kind of measure your current portfolio against a benchmark. That's all it is. All right, so industrials here, one of my favorite sectors, we're a touch overweight. So the allocator is saying to decrease by 1,800. I would almost call that equal weight, to be honest with you. Materials, my new position, my 100 share position in BHP Billiton has just put me at overweight for materials. Not that big of a sector anyway at 2.52. The recommended allocation is 211. So I would almost call that equal weight, to be honest with you guys. Financials here, current is 17.9, recommended is 25. So you guys get the point here. This is just an incredible thing to work down and get these recommendations for your portfolio. And I'm going to scroll down just enough to show you here the bottom numbers, how they shake out. As an aggressive investor, my current portfolio shakes out at 89.58% equities. Okay. So the remaining percentage there is going to be chewed up with a little bit of fixed income and then probably a couple percentage points of cash, because as an aggressive investor, they're basically going to tell you, look, we need you fully invested. And that is absolutely in line with the bottom end recommendation on fixed equities. And we're not going to cover that during this video because I don't currently have any fixed income. I really just have cash. And that's a rather boring aspect of a video like this, and it's not really the point of the video. The point of this video was to understand how to take your actual holdings, right? If you've got some real estate holdings in some REITs in your Roth IRA, for example, and you don't know what percentage of your holdings is compared to where your allocator tool says you should be in line with your investor risk profile, I would highly encourage you guys to run it through the exercise. You guys can see here I'm overweight energy right now. That's exactly where I want to be. I think energy is completely recessed. I think it's bottomed, and I think it's on its way up. So doesn't it make sense for me to be a little bit overweight energy? I'm totally fine with that. Utilities, I'm looking for a higher than average yield and a defensive play here, not knowing what the current market is going to do. So my utilities exposure, I'm overweight by $6,000. I'm completely fine with that. A touch underweight with communication services, slightly underweight with financials. I just think the sector's been so beaten up, I really don't want to have such heavy exposure to it. But you can see here how I can work through each one of these sectors and justify each one of my positions from a sector perspective, and always making sure that the holdings, my current allocation, is as close to in line as we can get it with the target allocation without losing sleep on not being perfect. So guys, with that, I'll kick you back to YouTube and we'll finish out the video. Thank you so much.
All right, guys, I told you you would be impressed. I told you would enjoy. I told you this is a riveting topic, asset allocation. You can tell how important this topic is. And for you guys that have stuck around for the entire video, kudos to you. You will be better for it, all right? If you've spent 15 or 20 minutes on this video, you will come out of it a better investor, okay? You will have answered the question, what type of investor do I want to be? How do I align my portfolio so it reflects my investor profile, whether or not I'm a conservative investor or an aggressive investor? And this is key. That can really, really save you in the long run to make sure that your portfolio reflects you. And in the end, that is the goal. If you don't have asset allocation, you might as well go at this thing blindly. So hopefully this video really helped you align your investor profile with your portfolio makeup and how that is structured against your recommended allocation. Guys, as usual, help me subscribe to the channel, support the message that we're putting through. Leave your comments at the bottom of this video and share this message with anybody out there that you know is interested in getting involved in investing, okay? We push out these fundamental investing videos that are absolutely critical to master. If you are going to have any level of success in the stock market, it's easy. Anybody can do it. You just have to have the desire and the want to do it. Guys, thank you so much for tuning into the video, and good luck in your investment future.